What you see on the screen is not always an accurate reflection of what happened. Well, that's why you guys listen to pre-market prep. We're about 25 handles higher at one point, but little catalyst crept in, and we'll show it to you here when Dennis and AB come on. AMAT earnings, H&R Block, new all-time high. CC Lagator, 835. He's going to put this whole week in perspective and talk about the next few months in the options market. It's Friday. Pre-market prep starts right now.
Welcome to Benzinga's Pre-Market Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
Okay, folks, here we are. Let's get the charts up there. Can you see the charts? We are adding the charts. There's the SPY, S&P, the old 3 a.m. turn. Should have gotten out of bed and peppered some bids right there. We made our high at 83 and a quarter. We just made our low at 57 and a quarter. And we have the buck trading down 21 cents after yesterday's rally, giving a little bit back. TLT bouncing back from yesterday's shellacking. Crude down 331. Is that correct here? Holy macro. What happened to the crude oil market? Gold, that's up 17.90 at 25.10. Silver going the opposite way at 28.27. That's down 14.6. Bitcoin bouncing back from yesterday's decline, up $1,540. Let's bring in Triple D and AB. We have had one heck of a week. How you doing, Dennis?
Oh, it's been a heck of a week, and there's been some wild moves, most of them to the upside. It's been a pretty good week after a disappointing week the previous week, obviously, from the Monday. We've pretty much got all of those losses back and more, and we are within striking distance of all-time highs on the S&P, which is unbelievable considering where we were last Monday. So in basically 9 trading days, we get all those losses back plus more. The song remains the same. They can't stop buying stocks, but we do have some overnight weakness here, Joel. We were up and we're starting to leak a little bit here, and Joel and I, you might think it's oil, you might think it's applied materials, but we're going to tell you why. And it is a perfectly inverse correlation. Look at the yen.
Yep, bottomed at 3 a.m. We took out that 68 level, found support right at the prior day low, and that's a big move from 67.40 to 67. That is a big move. That is the reason for your decline. I don't know if it was overblown in the first place, if it's over with, but right now you're looking for your drivers, you're looking for your catalysts. You got to look at the Japanese yen. I mean, that's it. I mean, there it is. Evidence.
It hasn't decoupled from this inverse relationship. And if we look, we didn't care the last 6-7 days about the yen because the yen was not going up. Overnight, yesterday, yen was down, helped the rally. Obviously, we had economic data helping the rally too, but it didn't hurt that the yen was down as well. To this morning, though, and starting precisely at 3 a.m., and if you bring up the S&P overnight chart, Joel, you can clearly see the S&P topped at the exact same hour in the middle of the night that the Japanese yen started to rally. So you can see perfect inverse correlation here. So do not take the yen off your screen. I know they're not talking about the carry trade. I know Kramer last night did a whole segment on how the carry trade was overblown and we don't have to worry about this anymore. No, it's not true. We still have to worry about the yen carry trade because if the yen starts to rip higher, this market will roll over really hard. So as long as the yen doesn't start ripping, and if you don't have, yen futures, don't worry. The FXY tracks it perfectly. So you can bring up the FXY, show that, Joel, because it's going to show you. So as long as you have FXY on your screen, you can keep an eye on it there. Joel's going to show you the overnight chart, which will look the exact same as the currency there. You can see the FXY moving up. I don't know why.
See, but it was 3 o'clock. So,
you know why too. It's all odd lots, but it's bid up 62.48. So the chart is supposed to be up here at 62.40. You're not seeing it there because maybe for whatever reason yours doesn't show odd lots. I don't know why.
They got a few ticks in here, but
it's right now bid at
Yeah.
62.47. So put your little
Right
dot,
here.
and that is where we are bid right now, 62.47. So you can see that bounce there. So yes, folks, we are still worried about the carry trade. Again, this is not a huge move. It's not a 10% move. It's not like, all of a sudden, sell, Mortimer, sell because yen's rallying. It's a rally, though. And the S&P is paying attention. And that is why we've rolled over, folks.
One more thing, then we'll let AB steer, and I'm just going to bring this up to the SPY, and I'm not talking to you day traders out there, and I'm really not talking to you swing traders. You could you can swing out of this, but if you're like a super extra long term investor, and you were looking when your portfolio was at 550, 560, you're like, whoo, man, I am the greatest investor of all time. Boy, I would love to take some chips off the table. There's an election. There's still a lot of things going on. And then on that Monday, you're looking at 510 and you're like, oh my gosh, what did I do? Oh man, I can't retire now. You're back up here. I mean, this is a historical move this week. You're getting, I mean, it all depends
You were made
on
whole.
perspective. I mean, what more could you ask for if you're a long-term investor getting ready to retire? And then you have the yen carry trade. Boom, you're back up here. I don't care. I mean, to me, it's all-time highs. I mean, what are you gonna?
We're basically at all-time highs.
What are you gonna do? Quibble over 10 points in here? So it all depends on your time frames. It all depends on your perspective. But man, that's
I'm
not
with you, Joel. I mean, and again, I've had some cash and I'm not panicking here by any means. And I think if you're a long-term investor, you ride it out. But if you're a trader and you're like, oh man, I got to buy stocks right now. What can I buy? We're dipping this morning, we're down. Give a perspective. We are up from the lows. We are up approximately 350 handles on the S&P. Am I doing the math right? I think it's 20, 40.
Yeah, 51.20.
350 handles from the low in 9 trading sessions. We are up approximately 7% in 9 trading sessions. The average return on the S&P long term is not 30% a year. You want to know what it is? It's about 8% a year. You just got a year's worth of gains in 8 days. If you are buying stocks and hungry to buy stocks like right now, today, you are absolutely doing it backwards. I tweeted this out yesterday after we rallied. I know we rallied a little bit further after that. I'm a little bit early, but I think, profit taking is prudent here. Now, again, if you got a long-term time horizon and you're 20 years out and you're just buying good companies, reasonable valuations, this conversation is not for you. But if you're a short-term trader and you're buying stocks at this point in time, I think you're on the wrong side of the trade.
470 handles, Dennis, off that 51.20 low to the high. 473 handles in the S&Ps because the low was 51.
This is an incredible bounce back, an incredible move, and an incredible bounce back on many stocks to resistance. Like we're getting up there, S&Ps, like this is where we struggled before. The Qs are getting back up there to where they failed down before. I mean, NVIDIA is getting back up. We had all kinds of troubles in this 120 to 130 area. So it's right back in there too. So many stocks just back to where they were. What a gift to get it all back. And, are all these worries over and everything overblown and, we're just going to go straight up? Well, we don't know, but there's always a new worry around the corner. And it always seems like if you're buying dips and selling rips, you're probably going to make more than the average bear. This is the definition of a rip the last 9 days. This is a rip.
All right,
if I'm looking to buy stocks, I'm waiting a little bit. I'm waiting for a pullback. And I'm looking to buy stocks. I'd like to buy more stocks. Sure, I'm always liking to buy stocks. Stocks only go up in the long run. But I think you need a dip now. I think now if you're buying, you're chasing, maybe the chase continues to work. Sometimes chasing does work, but more often than not, it doesn't work. So I go with the odds. The odds are it probably isn't going to work.
Let's get into some earnings. We did have Applied Materials report yesterday after the close. And, we've still got NVIDIA coming, but the semis, we've talked about how high the bar is for semiconductor companies reporting this quarter. EPS for Applied Materials, AMAT, came in at $2.12, beat the $2.02 estimate. Sales came in at $6.78 billion, beat the $6.67 billion estimate. The outlook was mostly in line, although the market didn't love some of the guidance, slightly below some of the expectations for Q4 EPS guidance was $2 to $2.36. The estimate was $2.14. So that leaves some room for the EPS in the fourth quarter to come in below that $2.14 estimate. Stock trading down about $5.50 this morning. But I mean, yesterday we were talking about Baba and some of these other companies that reported, and people went out and bought the dip on them. So we'll see if those dip buyers come out for Applied Materials this morning.
They might. Hard to say. I think 200 area, you probably get more buyers here. You got it down to 206, but it again probably matters what's happening with the market overall. I mean, if the market starts ripping higher, then they're going to look for dips to buy. And that's really what happened yesterday with stocks like Alibaba. Rising tide lifts all ships, and you get the market ripping, obviously, on our economic data. And then every money manager saying, what can I buy? What can I buy? Too much cash. What can I buy? Oh, Alibaba's down. Better go buy that. You know, well, what else is down? What else reported last night? Hey, what reported last night? What's down? That's what's happening. And that's what happened yesterday. And that's what bailed out stocks like Alibaba. And what did report yesterday? There was a couple other ones, too, that were trading lower in the pre-market and then or lower, and then they obviously went
Snowflake.
higher.
Snowflake.
And Snowflake is your classic example because Warren Buffett sells it all. And then, you know, it gets a downgrade too, and it bounces back, and they're like, you know, but then again, it's the same thing. What can I buy? What can I buy? What can I buy? That's what was happening. Rising tide lifts all ships yesterday.
It did. Just looking at the AMAT, boy, oh boy. You could use the pre-market low, 204.26, but you've had about a 40-point move here. So if you want to, you know, be a little bit more prudent here, maybe look under 200. This is kind of like a curveball, I think, if you're looking at it. If it holds yesterday's low at 205.13, I think you're in good shape here to rally back, maybe get up near the close. But if you lose that 205, your next daily low was 197.73. So really nowhere to go after that. I just wanted to bring up the Baba. Baba getting a little boost. Michael Berry is up to, I think, a 21% stake of his overall portfolio in Alibaba. They bought right at yesterday's low yesterday. So if you're looking why you got a little kicker here in Baba today, there's your reason.
Did he buy more yesterday? Is that what they said?
I thought
that was disclosed on the 13Fs the prior day.
Yeah.
I don't know if we had any other disclosure
more?
happening that he bought more. I'm not aware of that, but I do know that it's the biggest position in his long-term portfolio. Okay. Michael Berry, obviously famous from The Big Short, made a lot of money then, has had a lot of bad calls since. So, you know, and he's a value guy too. I have Alibaba. AB is Alibaba. Seems like everybody's got Alibaba. Nobody makes money on it, though. So I don't know what, you know, again, the company, you know, we've looked at this, you know, and said, and I'll say it, Kramer said, everybody said it. We know why Alibaba doesn't continue to rally because it's in China. If it was in any other country, the stock would be a $300 stock. But it's not. It's in China. That's what they just can't quantify the geopolitical risk, and that's why nobody wants to buy any of these China stocks. Pinduoduo has been eating their lunch a little bit, though, so we shouldn't say that nobody wants to buy any China stocks. Pinduoduo has had a pretty good couple of years. So still not back to where it was 3 years ago, but it's had a pretty good couple of years. So maybe them eating the lunch a little bit. You know, Jack Ma not in favor as like he was before.
Where is Jack Ma?
There was a game, you know, where's Waldo? Where is Jack Ma? Remember he was missing for like 6 months, but then they found him and he was okay. Just was like not as powerful as he once was. Never say anything against China. Never say anything negative against China if you live in China, especially. We're okay. I say negative against China that you can't invest those stocks because of geopolitical risk, but then I started investing in them. So what do I know? I changed my mind, and it's been a bad decision because I'm even on the Alibaba, but I'm way down on my Baidu. I wish I would have stuck to what I was saying and just said, don't invest in China because we can't quantify the geopolitical risk. And I wouldn't be down 15% in Baidu.
You are getting some analyst love in not upgrades or anything, but you did get some price target raises, I believe, from multiple firms on Alibaba. Not actual upgrades, but price target increases. Continuing to fall here, Dennis. You
A
got to
little bit
get some.
ugly.
Yeah, you got to get some bids out there. I mean, we've dropped 10 handles since the show
Well,
started here.
we've also had some imbalances come in, early imbalances from options expiration. Remember, folks, yes,
Woohoo!
indeed, it is options expiration. Yes, indeed, there are big moves sometimes on options expirations. And yes, indeed, we do set up for some big moves because we've had such wicked moves here coming into this options expiration. But as of right now, the majority of the opening imbalances are sell imbalances. Now, again, it's still 8:15. So we're talking, we're 75 minutes away from the open here yet. So a lot can happen in the next 75 minutes. But if the market was to open right now at this moment in time, stocks would open way down.
AMAT wasn't the only company that reported earnings. We also have H&R Block, which reported yesterday after the close. Kind of not H&R Block, tax company, not one that usually makes a big move, but the numbers were strong. EPS $1.89, beat by 15 cents. Revenue of $1.06 billion, beat by 30 million. The guidance came in above consensus. The stock is trading higher now by more than $5, 9%, which again is a huge move for H&R Block here, ticker HRB.
Do you remember when, I wish I could find the date,
That was
that
a song. Do you remember when?
do you remember when there was the government was going to come out with something for taxes, like to do you
Yeah.
remember?
It's like last year, the IRS was going to start helping with like government, like preparing returns, and H&R Block got absolutely hammered on this possibility that the government was going to actually, IRS was going to help. Like the IRS, we even said about it that day. The IRS is so underfunded that they can't even like answer the bloody phone. And maybe it's gotten a little bit better because I know about 2 years ago there was articles that only 1 in 50 calls were actually being answered by an actual agent. So you go through automation hell for like 10 minutes. I know, it's because obviously I worked for Bright Trading for a long time. I had to deal with the IRS for a long time. But I mean, that was the thing, that IRS is going to come out and they were going to have a whole nother team where they were actually going to help prepare returns. That was
That was it. Yeah.
They don't have the manpower to even handle, looking at the returns, let alone preparing the returns. So that was never going to happen. But I do remember that, and HR Block got hammered on it. It was probably down there in the 20s when that happened. And
when was that? When was that? Someone help us out here. Chat, you guys can Google. You guys can help us out here. But anyways,
IRS is, John Fernandez says, give me a break. IRS is absolutely underfunded. They're understaffed, underfunded. It's ridiculous. And I mean, it's gotten a little bit better, but I'm not joking. Go Google some articles. Washington Post 2 years ago put out an article that the IRS answers 1 in 50 calls because they're so understaffed. So
yeah, I think they said the like $1 billion.
I think it's gotten better.
I think they said like the $1 billion or whatever they were putting into the IRS to help. It was like specifically to help audit, wealthy individuals that were kind of skirting some taxes. That like $1 billion spent in funding in the IRS would return, like 10x that in revenue for the government from getting back some taxes from people that weren't paying what they were supposed to pay. So I don't know what the progress is on that, but I remember those numbers coming out when that decision was made. All right, guys.
I just want to say two things. One, it's my former employer, H&R Block.
Oh, wow.
Yeah, they bought. Well, actually, I think they bought Oldie after I started Bright Trading. But yeah, they bought Oldie discount. Herb bought Oldie discount. I mean, this is a new all-time high. I don't know what your target is. I don't know what you want out of the stock. 63.25 is your pre-market high. You're only a buck away from there. Wow, we are still just getting shellacked, Dennis. Is they're just all just flat out millions, millions.
Yeah. A lot of sell imbalances right now. That can change, and it's early, so they can change, but we are getting hit here. Keep an eye on the FXY too, but it's not moving.
Here in about 10 minutes, we will get a little bit of economic data. We'll get housing starts, and we'll get building permits at 8:30.
And every black economic data point moves the markets now.
I
2 years
know.
ago, they didn't care about anything, but yesterday, retail sales, and we're like, oh, to the moon. Jobless claims too, but I don't know. Every economic data point matters right now.
That's what I said. I said to Aaron. I said 8:30.
Sensitive market.
Actually, at 8:30, we have building permits and housing starts. So, they're going to go down. Oh, we're going into recession. Oh, the Fed needs to cut immediately. I mean, the narrative changes so quickly in this market. Like,
welcome to high frequency trading markets where the narratives change in a split nanosecond. And the bots go nuts this way, and the bots go nuts the other way. And I mean, this is what we wanted. This is what everybody wanted. They wanted faster markets. They wanted diversity. They wanted 16 exchanges and 50 dark pools and all these off-exchange market makers. It's what they wanted. They didn't want simplicity. They wanted complexity. And it's made a lot of people rich, a la Citadel and Ken Griffin.
All right. Well, I don't want to talk a little bit about yesterday's price action a tiny bit. I mentioned it, given AMAT's, earnings there. We had just kind of dip buying across the board. When we did the show yesterday, Alibaba was trading in the red. That got bought up into the green, maybe part of it on the Michael Burry filing. But I think more so, some of the analysts gave price target raises on BABA. And I think when I started going through the report a little bit, the e-commerce part of the business was kind of maybe not so great numbers wise, but the cloud segment was still doing really well. So I was like, this actually seems like a pretty decent report. And maybe it just took some traders and investors some time to digest the report. You also, of course, chips were trading lower. You had NVIDIA slightly in the red while we were doing the show yesterday. That ended up closing up 4% yesterday. So NVIDIA's run now since that Monday, where it dropped down to $90, has just been incredible. I got all the
over
way up
30% in 9 days.
That's pretty good, Dennis. That's pretty dang
not bad.
Good. Yeah.
Maybe profit taking is prudent here. Maybe it's not a bad idea to take some profits. Maybe, just maybe, this market's a little bit overextended.
Well, so NVIDIA today is trading down again now, a couple bucks, about, or $1.17, so about 1%. And again, it was trading down yesterday when we started the show, but that didn't stop it from closing up nearly $5. So I think this will be an interesting day for NVIDIA to see, does that dip buying mentality, does that appetite for dip buying continue even after AMAT's kind of weaker earnings? Of course, we do have NVIDIA coming out, not next Wednesday, but the following Wednesday. So here in about, 8 trading days here, we'll get NVIDIA's report, which will be big and market moving. So I don't know. What do you guys think? Do you think people will come in and buy the dip on NVIDIA if we do open lower today?
Yeah, we're Applied Materials isn't helping, and it was down on Applied Materials last night, and then it just says, screw it, we're going up anyways, and they bought it all night because those overnight traders can't help themselves. Stocks really do only go up overnight, it seems like. That's the Robin Hood mentality. They came in short on Robin Hood, for crying out loud. So, how are they going to go down? So, they're up there buying stocks, and the real money comes in, and sometimes you see, the reversal here. But NVIDIA was trading up at 123.5, which was up over $1 when Applied Materials was trading down.
Yeah.
It was absolutely ridiculous that it was up that much on Applied Materials. So, but we're rolling over on it here right now a little bit. It's got us about $2, and since we started the show, man, we got the good title for the show.
I know we
take some
did.
profits, and then NVIDIA sells off $2.
I think someone is hacking into the pre-market show, and
I think this is a big hedge fund manager that just says, "I do what they say on PreMarket Prep."
I'll tell you right now, no position in NVIDIA or anything, but Aaron, you're talking about trying to buy the dip after this kind of thing. The only thing, no position, nothing. The only thing I would be thinking about is, will it see the close today? The mark. Look at the mark that you got on that yesterday, 122.86. That's the high. You got a pair of highs up here. So yeah, maybe just buy the open. It's going to run right back up, go unchanged, take out 123.24. But now I'd be thinking the opposite. I'd be thinking to trying to sell a rip in this one, especially anything near unchanged in NVIDIA.
Yeah.
So we have some news. Not a lot of news overnight because there was basically nothing reporting, but we did already cover the Applied Materials report. Couple other ones reported this morning. Can we do Madison Square Garden, MSGE? Because this is like people doing stuff. we've been arguing that, people are curtailing their spending to a certain extent, but looks like they're still going to concerts here. Madison Square Garden Entertainment, MSGE, reported this morning and is trading higher.
Yeah, let's see. So EPS came in at 53 cents. That missed the 52, or sorry, that should, okay, loss of 53 cents, missed the loss of 52-cent estimate. GAAP EPS $1.48, sales 186 million, beat the $169 million estimate. Yeah, and so stock up about 7%, which Sphere SPHR was a spinoff from Madison Square Garden, reported on Wednesday. We didn't mention that, but those numbers were also strong. So you saw Sphere stock take off. When I went to the Sphere, that should have been my sign to buy. Actually, hold on, let me look at the chart real quick. Yeah, if I would have bought when I went to the Sphere in early May, the stock was trading around $35. Now
boots on the ground.
Yeah, I mean, I was talking about how amazing it was, and I've really been wanting to go back. I need to find a time to go back to the Sphere at some point. I don't know who else they've got on the calendar for shows there. But
why is it so much better?
It was like, it's just so immersive in terms of in the experience. Like, you're inside this thing and you've got the visuals going on. The speaker systems are insane. Like, the seats start vibrating when like they, when they want them to. I was actually listening to an interview with the drummer from the Grateful Dead, Mickey Hart, yesterday. He talked about how, the band has played countless shows at stadiums meant for football or stadiums meant for baseball. And he was saying the Sphere was the first time they've ever played in a venue after playing for like 50 years, that it was a venue built for like music. It wasn't repurposed for music, and the acoustics, everything. It was just unreal. So would love to go back there at some point. So either way, Madison Square Garden, Sphere, both coming from the same parent company, trading strong here. As like you said, Dennis, people still going to concerts.
That's it.
Yeah,
I mean,
people are
still wanting to do things.
New all-time high, I believe, or is it a little bit higher? 41.58. Put that down on your trading blotter. That's the all-time high that you kissed back in May. Pre-market traders took it to 42.50. Man, this thing was at $34 at last week. So depends what your target is. Former all-time high, 41.43. All-time closing high, right up there too at 40.30 for MSG.
All right, let's see. We have another headline, I suppose, more of just a crazy stock of the day. I don't know. I'm sure some of our audience out here yesterday was trading this one on the pop. You had Cingulate, ticker CING, reported some positive data for one of its ADHD treatments, CTX 1301. Cingulate receives a European patent for its lead asset. So this is kind of like one of those pre-rev biotech companies. When these companies get some positive news, the stocks can really start running. Closed up 160% yesterday, but the story not over there. Stock up another 90%, $4.30 this morning. So in a couple days, this stock has gone from like $2 to now $9. And Joel, I mean, what are the technicals? You're running into some resistance.
Well, first of all, I know absolutely nothing how the European FDA relates to the US. So whether what this means, how far it is from getting approved over here. ADHD is big. So I don't know, Dennis, if you have any comments on that, but pre-market high comes in at 10.28. You've leaked a $1.20 off that. See if you get back up there. If it's going to be a runner, then it's going to get 10 bid, 10.50, 11, those kind of things. But I'll just stick with the longer it takes out that pre-market high, chance of a little bit of a retreat. It is throwing some volume around. So there's some believers in this move.
13 million shares already. It's very early in the morning. The stock is crazy. Again, is this, like Reddit, just, the Reddit stock of the day? We still know, like, when the market starts going up, you start seeing, Reddit getting all excited. You start seeing, a lot of retail just like, what can I buy? Oh, here, this is the one we're going to gang up on. That all goes silence when the market's going down. When the market's going up and it's going up for 9 days, you start to see these stocks, just pop out of nowhere. These no-namers get a little bit of positive data, and then the algos go nuts, and Reddit goes nuts, and everybody goes nuts. And we know how these stories end. Usually they leak a lot of the gains back. So I'm definitely not chasing it. But sometimes it go 4, 9, 20, and then it poofs. And then when you look at it 6 months later, it's back at 2, and you're like, oh, what happened? Well, it just suckered everybody in. So I don't follow the company closely enough, so I don't know if that's going to be the story here. Maybe there is a real story here. Maybe this is real, but a lot of times these little, pops, are just selling.
Oh, 830 number, Dennis. Oh, I'm sorry. Oh, 830 number. Building permits, housing starts. Not a huge reaction.
No, just
got
kidding.
Building permits came in at 1.396 million versus 1.43 million estimate. Housing starts down 6.8% month over month. Housing starts there also lighter than so housing starts and building permits came in lighter than expected there. Not sure how much that we care about those numbers, but yeah, you got them.
And we're glad we got them.
Yeah.
Market not moving too much, was already down again. The imbalances still remain mostly to the sell side, and the market's still rolling over. And yes, the Japanese yen has rallied a little bit farther even, so we're just slowly climbing up 0.76%, up almost 1% on the Japanese yen now. That's not nothing. That's not nothing.
Yeah. Yep. And that $68 area is important because look at all those lows that we had before we broke down yesterday. All these lows at 68. So that's a big green candle. S&Ps, blink and we're going to be the intraday low from yesterday is another 20 handles lower. And that's just the intraday low. The Globex low is way down there at 71 and a quarter. But who knows with this market? We shall see. But right now, just someone's got their step down sellers here in the S&Ps looking for bids. Someone's coming into the pit and going, they want to get short. They're going bid. And then someone bids.
Can't do that anymore, Joel. Can't do that anymore, Joel.
No, they asked for a bid.
I know. Oh, they're asking for a bid.
Yeah.
Because sometimes back in the day, they'd be like, I'm bid, and they're trying to get you to get buyers, and it's sold, and it's called, you can't.
And then they offer it.
No faking
there was
anymore.
one guy.
All illegal after 2008. All that stuff.
Who is this guy? I think his badge was Sir Craig Beardsley, and he would bid. You'd go, 46 for one, sold at 45. Like you'd be like. You didn't even go get to check the trade, and you already offered it down. Well, we used to move at nickels back then, but holy mackerel! Watch out here. We've lost 20 handles here since the start of the show.
Yeah, quiet little sell-off here.
All right, let's see. We do have.
You shouldn't have called the show. What did we call the show today?
Take profits. Time to take.
Yes,
profits.
change it.
It's our fault. Change the title of the show right now. Change it to Buy the Dip, because you should just change the title to Buy the Dip, because the algos all got panicked here reading the title of our show.
It's just these hedge funds in our chat, Dennis, is what's doing it. These guys are acting like they're, just little mom and pop traders, but Ken Griffin's here, Mike Curry's
here, and they're hammering.
Stevie Cohn, Jackson, every once in a while.
They all are under different names. Disk drive.
Yeah, you never know. Too. Yeah. Pedro, he never know who he might be. Who could he be? He might be Warren Buffett. I don't know. This is a little early for Warren.
It's impossible to know who all these guys are. Okay, lots of jokes here today. Let's move on. Texas Instruments. Before we bring CC, one more stock. Texas Instruments getting some money.
Yeah, let me pull this up real quick. So TXN got a receive up to $1.6 billion in proposed funding from the CHIPS and Science Act for semiconductor manufacturing in Texas and Utah. The company expects to receive $6 to $8 billion from the U.S. Department of Treasury's investment tax credit. So, we've seen other stocks like Intel receive some funding or set to receive funding from this CHIPS and Science Act to do more onshore manufacturing of these semiconductors. In Intel's case, it hasn't really helped the stock that much. Texas Instrument doing a little bit better than Intel, although I don't know who isn't doing better than Intel, but either way, trading up about $1.20 this morning. Texas Instruments did close up more than 3% yesterday. So nice little run here for Texas Instruments past couple days.
Joel, thoughts as we get to CC?
I can't think of buying anything right now.
No, I know,
I
and
can't think of
everybody's like,
buying
"What can you?"
anything. So I don't want to say, oh, it's up $1.22, it's gonna fade. I'll say it's just wow. Look at
It was
that.
$180 9 days
It's
ago.
5 stock. If okay, if this gets back in the 204 handle, where are we at? 203.15. There's 1, 2, 3, 4, 5 highs. Let's call it 204.30 right there. I mean, and there, right there, right now, got there in the pre-market. That's resist. 5 days in a row, it stopped there, and then it went down to 180, and now it's back there, and you're going, woo! Oh man, I was hoping to sell at 200 today. I got a million to go there. So who knows how the big boys are trading it, but the pre-market high does coincide with a what do we call 5 highs in a row? Quintuple? No, that's quad quin. Is that what it is?
Quintable.
Quintuple. All right, let's get some facts. Let's get
CC
CC on
in
that.
here. Bring us
Yeah,
back
rein
in.
us
Get
in.
All
CC.
right, it's an options expiration day. That means we're going to talk to CC Lagator from OptionsAI. We love bringing CC on. He's always got some great info for us. So without further ado, let's go ahead and welcome CC on the show.
CC Lagator, Options AI. I just love this. We talk about people doing good preparation and coming with good notes, for stuff for the show. Number one, what the hell just happened?
Yeah, I was about to say, has anything happened since last time I was on?
Yes.
Yeah, it is. So, you guys started off the show just like how crazy it is to see basically like an 8% round trip in a week, or just over a week. And what went on in the options market was even, sort of more unprecedented, which was, and for all this to happen, it's not out of the blue. There were warning signs and they were building and building and building. And then to have that all kind of happen in, if you remember back to like the great financial crisis, you would see those kinds of moves a bunch, like during all of that volatility, right? Like you get whipped around. Even in those COVID, like that first couple of weeks of the COVID trading, like sell-off, you would see those kinds of moves. But for it to just kind of happen out of the blue, then completely reset is pretty bonkers. And it basically has completely reset the options market. Now, things have changed, I would argue. And it is much more on a knife's edge right now. But had we been having this conversation 3 weeks, or we had this conversation last expiration, and we were talking about, the VIX in the low teens, there were starting to be some signs of cracks, right? Like in the market, we were seeing the mega cap start to sell off. We were seeing a little bit of odd, weirdness. And we talked about potential hedges to places where you would want to buy some stocks or buy the market. And then what ended up happening is all of that happened all at once. And we saw basically the VIX creep from 15 to like 19 and then go from 19 to 65 in one day, right? And now we're back to 15, right? 15, 16 now. It's probably gonna pop a little bit today. But to have that kind of, to go from the teens to 60 and then back to the teens, like it's pretty unprecedented. We've never seen it before.
That quickly.
Yeah, it's pretty crazy. And what I would say is the backdrop, we always knew this. And I think I talked about this the last time I was on the show. If you look, you can pull up like a VIX futures curve, right? You can just Google it and you'll see a couple of sites that run that. Since even going back to the days early this year when we had that long, pretty much unprecedented run, remember we hadn't had like a down 2% day in, I don't even know what the stat was, but it was
350 trading days,
yeah, something
which
crazy.
is an incredible amount. That's a year and a half.
And that's the type of thing where you're like, if you're an options trader, like you'd be like, okay, I'm never going to buy an option again in my life, right? Like that's what that would do to you, that kind of string.
Yeah.
And then, but what was interesting is if you look at like a VIX futures curve, we've always had this seasonality. Like we are right in the middle of, we're right in the beginning of what tends to be a volatile period, right? Like everybody, kids go back to school, everybody comes back from the Hamptons, and people start trading again and you start to head into that fall, like September is really volatile, and On top of that, we have the election this year, right? And everybody, you know, everybody's known that it's been November 5th for years, right? So we've had, if you look at that VIX futures curve, there was always these expectations of volatility coming up, basically starting, you know, in a couple of weeks. We might have jumped the gun a couple of weeks. That remains, right? So what has changed is we are right back to, if you ever wanted to find a hedge on one of your stocks, you've got a second chance, right? Like right now. And if you start to look at some of those charts, think about those like mega cap companies. They're pretty much, I think most of their charts look the same, where they've kind of retraced like half of that move, right? Back to their all-time highs. So the market's near its all-time highs, but some of those stocks like Microsoft, Amazon. So if you're like, okay, I think this stock, you know, like we get through the election, we get through all of this volatility, you know, the market makes new highs by the end of the year. Some of these stocks get back to their all-time highs. Options also cheap, like to do it. So it's so weird, because had we had this conversation a week ago, we would have been talking about, you know, volatility is off the hook. The VIX is at 40, you know, things are bonkers. And right now it's as if it never happened, or at least you have it, but we know it has happened, and you have a second chance to do stuff, if that makes sense. You have a chance to play for high in some of these stocks, and you have a chance to hedge if you are worried we go into some sort of slow grind into year end, or at least into the election, or whatever your viewpoint is. You've gotten a second chance to do it.
Remember that commercial I was on CNBC for a long time, and it's like the guy's like having dinner, and then he's like checking his stocks on his phone, and he's like, just a second, the market's really falling, I got to go put on some hedging trades. Right. And I'm like, I'm like, that's the stupidest commercial ever. What the hell? You're putting on a hedge when the market's falling. You're supposed to put on the hedge before the market falls. Exactly. So that's what CC's telling you here right now, is you've had such a wicked rally here. I mean, if you're really, you know, we're nervous 9 days ago, now is the time to hedge. The VIX has come back in, you know, options actually yesterday, it's falling today. But, you know, yesterday would have been an excellent time to think about hedging. It would have been an excellent time to think about maybe locking in some profits. But people don't think like that. They think, oh, gosh, I got to sell. Market's going down, I better sell. You know, market's going up, I better buy. I mean, and, you know, market's going down, I better put on a hedging trade. That's just backwards.
Yeah. And we talked about this last time, and we used NVIDIA as an example. And I believe at the time, NVIDIA was like 125, let's say, right? Or something around that. And it was what, 135 or something, you know, just before that. And we talked about, like, how do you think about a hedge? There's a couple of, and again, I think I said on that appearance, I was like, I don't often talk about hedges. I think they're generally a waste of money. Generally, when the market is boring and you're doing a slow grind, it's a good way to like lose 5% a year, you know, of your gains, right? You
give away most of it. If you're always hedging, you're going to make nothing in the markets. If you're continuously hedging, you will hedge away all of your long-term profits. Because if the market goes up 8-9% a year, I guarantee your hedges are going to cost you 8-9% a year, and probably more. So the timing of the hedges, if you can time them well, you can be okay with it. But if you're constantly hedging your portfolio, you're going to make nothing.
Yeah, and like why be long the market if you're constantly worried, right? And so the way I like to think about those moments is, well, there's two ways I like to think about a hedge. Like, let's say you have a concentrated position, and you are worried. You are worried that you will panic sell it, right? So imagine if you had made all this money in NVIDIA, or you'd made all this money, you know, there's all those moments in Tesla. Tesla makes those rallies, right? You just made a ton of money. And you're like, but then you know that Tesla and NVIDIA have these habits of having 30% drawdowns or whatever, right? And you're like, what would it look like? You have to kind of, you think of the worst, and you're like, how could I actually turn lemons into lemonade if that happened, right? And so you take a concentrated position, you've made a bunch of money in a stock, and you're like, how do I make sure that I don't panic puke it when the market's down 7% in a week, right? And then the other way to think about it is, where would I buy this stock if it went lower, right? And I think that's what we used as NVIDIA as the example last time, was if NVIDIA got down to, I think we were using at that point like 105 or something, right? Or 110, it got down to 90, right? That day. It's like, where would I buy NVIDIA? And what can I do so that I actually follow through with that idea, right? And what ends up happening on a day like last Monday is everybody's like, oh my God, if NVIDIA came back to 110, I'd be such a buyer. And then it's 90 and they're not a buyer, right? and so you do options positioning so that A, you can sleep at night, B, you can you're not like you're not panic puking on days like that. And the other one is to set yourself up for success, right? It's like, on those days when there's blood on the streets, I want to be a buyer of those stocks, not a panic seller. And so that's the way I think of hedges. It's like, I don't want to constantly have them on, but there's moments. And I would say, like we were talking about hedges, it's also the bull, like you all were talking, and I have the same reaction, is like, I think this is kind of overdone right now, this rally. I'm scared to buy a stock, but then you pull up a chart, like, pull up any of those mega cap companies that are shy of their highs, you're like, those could easily go back to those highs, right? And if that's the case, I don't want to stick my head out here. So what do I do? And it's like, you buy a call spread or something. You risk as little amount of money in a Microsoft chart right now to go back to those all-time highs. And you go out to the end of the year or even January or something, right? And you're like, all right, if I'm completely wrong and I look like an idiot and this whole 8% bounce we just saw was like a total trap, I only wasted this much money on a call spread or something. So that's the other way to use options, is like when you're like a hesitant bull, right? And you're like, you're not willing to go completely all in. And it's like, how do I position because right now I think we're all kind of looking at this and we're going, this could at least go sideways for a while, if not pull back a little bit. But we might be wrong. It might just keep ripping. Everybody's so off sides that it could just keep going higher, right? Which would be crazy, but it could happen. Yeah,
it could happen. Anything can happen. I mean, that's why, the market is always unpredictable. I don't think a lot of people would have thought we would be where we are today 9 days ago. Like when everything, the carry trade, NVIDIA's 91, would anybody think 9 days later NVIDIA would be within striking distance, of getting back to the all-time highs? I mean, run 30% in 9 days straight up. Yeah, it's just the way the markets are built. They're built to punish the maximum amount of participants, and when everybody's that scared, I mean, that's usually the time where you should be thinking about buying something. When everybody's super uber bullish and saying, like Kramer last night, the carry trade was overblown and it's over. I mean, that's the time where I think I may want to ring the register, actually. So, and and here we are this morning, CC, we were just saying, we get a little rally in the Japanese yen. The smallest little rally started at 3 a.m. last night. And what happens? The stocks topped out at 3 a.m. last night, and we've lost 35 handles because the Japanese yen has a little 0.9% rally. I mean, so it's not over. It's just a matter of the Japanese yen has stopped going up. If it started going up again, its carry trade would all come back to roost. Right. So it's not like nobody cares about the yen anymore. Just the yen didn't go up anymore, and the yen started actually going down, and that's what saved the markets. But if the yen starts to rally again, Katie bar the door could get ugly again. So it's not completely over.
And I would say, like, it's sort of funny with like the yen carry trade, because it's one of those things where, and I'll give you another example of like kind of what happened last week. And it's sort of the day-to-day market inefficiencies, right? So I would consider the yen, it was sort of funny. There was like a joke going down on Twitter. It's like, I woke up this morning, everybody's suddenly an expert on the yen carry trade, right? That we hadn't even heard about like a couple of weeks before, right? Yeah. And so, but in those moments, those tend to not be the ones that are like start to bear market, right? Or it becomes a bear market or whatever. It's like one of those things that causes that kinds of craziness last week. But I would say what was underlying that craziness, what allowed us to make that move, was we were already a week or two of recession fears, right? And so the yen carry trade was the trigger, which was like, oh man, I might not have time to get out of this, right? At least for US equity trades, I think, is my take. And so you have that kind of weird market inefficiency happening with the yen carry trade. And people are like, man, if we go into a recession, I'm really screwed owning all of these stocks near all-time highs, right? And it's sort of like, and that's what turns into a bear market, is like, an actual recession, that kind of thing. And those triggers, and the reason I was bringing that up is that volatility, we were talking about like the 300 and whatever days straight of like not a 2% pullback in the market. We've talked about this in my prior appearances, but there's a couple of weird options things that are new in the last couple of years, right? There's zero DTE trading, which we've talked about, right? And that has a weird effect sometimes on short duration movements in the market. The other thing is that there's all of these short vol funds, institutional funds, and things like that. And I would argue that like last Monday was maybe sort of, we were very close to a moment where a lot of those like short vol funds blew out, right? And that would be like an interesting new thing that we haven't really seen. There was always like a couple of mutual funds back in the day that would basically sell upside calls and buy downside puts, right? Which is basically the normal skew of the SPX. There's all of these new funds that are basically doing iron condors. They're doing like constant vol selling, right? Like they're like income funds, right? Those are all new and they're pretty big. Some of them are pretty big. And we have not gone through a moment where we've seen like real pain in those funds. And that could be something, it almost happened last week. And that's another weird market inefficiency that's kind of built up over the last couple of years that like didn't even exist a couple of years ago.
CC, what about just over the next few months? I mean, we obviously have the Fed getting ready to start cutting interest rates, the election coming up in about 3 months. What is like the options market saying about all this stuff? Is there some extra implied volatility? And how are we to trade this market through options, during all these kind of uncertain times?
Yeah. And what I just saw a question in the chat, and I'm going to answer that really quickly because it leads into that question. Somebody asked if this is going to be a pinning day. Today's expiration is the last couple of times I've appeared on expiration day. It's been some of the biggest ever, right? Like in what's expiring. Today is not that big. And I don't actually know why. I think it's probably twofold. So much exchanged, like so many options exchanged hands last week that it might have cleared it out a little bit. But then also I think if you were looking out here towards this end of the calendar for anything in options, you were probably going out closer to the election, right? So I think it'll start to get into October, September, October, November will be the big expirations. Today's not that big. So somebody was asking like if we're going to pin today. There's nothing obvious that's going to happen today. We might pull back to 5,500. We might just stay right at 5,550. You know what I mean? But like, there's nothing obvious in the cards today. Now, to the question of the next couple of months, the way, we were talking about hedges, we were talking about upside. The way that would work is if you were positioning for year-end highs in any stock or any chart, when I talk about like vol and the VIX being back to where it was a month and a half ago, that is at the money options, right? What happened last week that remains is a lot of those puts are still bid up, right? Like people got hammered, right? Like if you bought puts last week, you got absolutely destroyed, but they remain bid up, especially out into like October, right? So what you want to do is if you were playing for a pullback, if you're straight bearish, or if you were looking for a hedge, you want to buy at the money options. And this will be true in an NVIDIA option play or an SPX or SPY or Qs or whatever. And you want to sell basically down near where we just hit last week, right? So you're buying close to the money. It doesn't need to be at the money. It could be like nearby. So like, let's say you're looking at SPX, you're maybe buying a 5450 or 5500, and then you're selling down near those. What did we hit? 52, 50, right? 5250 or somewhere down there, right? And you're getting you're buying cheap, selling expensive, if that makes sense, right? Mm-hmm. Now, to the other side, I would argue it was sort of what we were talking about. If you're playing for Microsoft to go back to the highs, I'm not bullish in Microsoft, just using that as an example. You want to buy near the money in Microsoft and you want to sell up there. And the only reason for that, you're not getting that same buy cheap, sell expensive. But what you're getting, and that's like buying a call, selling a call at the highs. I think if these stocks get to the highs, people are going to start to get very nervous owning them, right? Because of what the pain they just went through. So, but what happens in that case is volatility just continues to go down and down. And if that happens, if you own a call spread and Microsoft's up near its previous highs, the VIX is going to be 12. Like it's just going to, that's how it will have played out.
Yeah.
Is it will be a slow grind from here back to the highs. And so you're going to want to sell something up there against you buying Microsoft right here, if that makes sense.
All right. Well, this has been some great information. Always good to have you on, CC. Always good to have you on an options expiration day, because we don't know how to make sense of this, but
we always do.
You know how to make sense of it. All right, CC, well, enjoy the rest of your Friday and have a great weekend. We'll call your line again here soon.
Great to see you guys. Thanks.
Thanks, CC.
All righty, y'all.
So knowledgeable, man. He just got so much options knowledge there. That's why he's our options man.
We are now 5 minutes to the open. Joel, how are we looking?
Open? Oh, you mean 5 mintes to the end of the show?
5 minutes to the end of the show, which is 30 minutes to the open. 35 minutes.
We dipped into the 56.30 handle. We had just a slow leak down there. Caught a little bit of a bid there at the daily swing number and trying to bounce. I mean, that was a pretty. The imbalance is still sticking the same, Dennis.
Yeah, they've gone a little bit smaller, but they're still mostly to the sell side. Again, that can change. All it takes is a few institutions to come in and say, yeah, I'll buy them, and they come in and then they can flip. So right now, though, again, I think you got multiple catalysts for the market leaking. One, applied materials last night was already putting pressure on tech before they forgot about it overnight. Two is you do have options expiration, which is always a little bit more wild, and these sell imbalances are putting pressures on stocks. But the number one reason, which we've been citing all morning for the sell-off, is the FXY, is the Japanese yen having a little bit of rally here overnight. Rally started exactly 3 o'clock when the S&P sell-off started. And oil's weak too. I mean, we haven't given oil much love here.
What's going on?
Oil has rallied nicely, really, in the last week or two with the overall market here, and it is very weak here this morning. We're seeing oil stocks roll over across the board. USO's trading down substantially here now, so that's not helping.
Yeah, and obviously oil, a lot of it's what's going on is people worried about global demand for oil if there is an economic slowdown, which, speaking of, we did have JP Morgan come out yesterday and said that the probability of a recession now stands at 35%. I don't know if you guys remember a couple years ago, it was probably like
Jamie Dimon's always bearish.
It was
He's the most bearish banker ever.
It was
none of these bankers are all bullish, but Jamie Dimon's always bearish.
It was when inflation was still really high and the Fed had to start hiking rates to bring inflation lower. And Jerome Powell was talking about, we're going to see pain in the labor market. Everyone was saying recession. Everyone was saying it's not a matter of if, it's a matter of when and how bad it'll be. And then we never got one. But JP Morgan's still coming out now and saying, 35%, it's obviously not more than 50%, but that's still pretty... that's probably too big of a percentage for comfort for a lot of investors here, but they go through the probabilities here of a boil the frog or a soft landing. So I don't know. What do you guys think? Do you guys think 35% here is...
Canada's been, and I've said this, Canada's been in a recession for a year now. It's a different story in Canada. You can't sell a house in Canada. Like, there's just inventory everywhere. Housing prices are down 20 to 25% from the highs. You got listings. They got one, there'll be listings and people. The problem is, like, once you have a housing issue too, is that once people know their house was worth this, they never want to take less. So, housing prices have probably come down 20%, but everybody still thinks that they can get their peak pricing. So they all offer at the peak and they're not going to take $1 less. And that's why, the real estate market, and especially in Ontario here, is very slow. There's listings out there that are getting no showings. And if you went back to 3 years ago, a listing would get 25, 30 showings, bidding wars. We've got to be in there. It's completely different here now. So, is it possible the U.S. goes into recession too? The only thing that has kept the U.S. out of recession is the long-term mortgages, that they're all fixed for 30 years. Canada fixed for 5 max. That's the difference. That's what kept the U.S. out of recession.
I don't 35. What am I supposed to do with that information? 35% chance. That means that there's a
It's
60.
just they're making stuff up so they can get some
I mean,
clicks.
come on. There's a
Just making crap
65%
up.
chance that there won't be a recession. Some people are already in a recession. Some people, I mean, it's just, I mean,
Completely made up.
what can I do with
Well,
that?
Nothing.
What can I do with that information?
I think part of it, and we've
Useless.
discussed. I think part of it, and we've discussed it on the show the past couple weeks, and what JP Morgan is saying here is that the economy is now showing signs of slowing. The July jobs report was softer than expected. Unemployment rate rising for the 4th straight month, sparking a market sell-off. So I think what this has done now is it's put much more emphasis on economic data points that maybe in the 6 months ago we wouldn't have cared about or the market wouldn't have moved on. But now everyone wants to know, like, oh, well, what's the data today? Is it hot? Is it cold? Because anything cold now, people will, I think, cling on to a little bit more, like this JP Morgan report, and say, see, the economy is heading to a recession. But again, I mean, we'll have to see, because there's a chance that those jobs, that data was just kind of a one-off and that they're going to rebound next month. Either way, I mean, my outlook's the same. I'm just going to keep buying my stocks every 2 weeks and go about my business.
I am tempted to sell my JP Morgan that I bought during the April crisis. Well, that was last year. That's what I think of that call, but it's in my long-term portfolio and I won't do it. So anyways, that's it. That's going to wrap for today, folks. Anything else you wanted to get in, Aaron?
No, that was it. We did. I
Okay.
saw that across my line, the JP Morgan thing. Saw some people talking about it on Twitter, and wanted to make sure. I just wanted to hear your guys' thoughts on it. But all right, guys, it is 9:01.
People are arguing with me the Canadian price. I'm just going to the stats. So all-time high was reached in February of 2022. This is Canadian, not just because somebody's saying they sold their house in British Columbia there in 3 days. Sure, there's always going to be outliers. Maybe British Columbia is in better shape than Ontario, but here's the Canadian stats. So average house in Canada reached an all-time high in February of 2022. So going back 2 years ago, COVID bubble, 834,700. Today, that number is 718,700. So that's 120,000 off on 834. So about 14 to 15% down. So I'm wrong with the 20. We're about down 15% from all-time highs. But that's not nothing. That's something.
All right, guys,
not
thanks
nothing.
to everyone who tuned in to Pre-Market Prep this week. Tuned into Pre-Market Prep today. We will have live trading starting up right after this, and we'll see you guys on Monday, 8 a.m. Hope everyone has a good and safe weekend and stays green today. It's a Friday. Thank you, guys.